Have you ever thought about investing, but then you just stop? Because it feels so overwhelming, right? Like it's some kind of complex world that's only for the experts. Well, I'm here to tell you there is a really straightforward path to building wealth that, honestly, anyone can follow. So let's just break it down together and demystify this whole stock market thing, step by step.
Okay, I want you to imagine something. It's 1987. You started investing just a couple of years ago, and man, things are going great. Then, literally out of nowhere, the market has its biggest one-day drop in history. They're calling it Black Monday, the Monday Massacre, and your friends, the same ones who thought you were a genius last week, are now calling you totally panicked, begging you to sell everything. So what do you do?
Well, there was an investor who started back in 1985 who decided to just ignore them. He held on, and then boom, the dot-com bust hits in 2000. Again, total panic everywhere, but he just held on. Then came the 2008 global financial crisis. One of the biggest financial events of our lifetime. You guessed it, he held on. And he even held on through the global pandemic in 2020. And you know what? After every single one of those storms, the market didn't just recover, it soared to brand new heights.
So, after going through all that chaos, all that uncertainty, what was the actual result? Was it really worth the stress of watching the market crash 4 separate times?
The average annual return during that entire crazy period was an incredible 11.23%. Now, that doesn't mean it went up by that much every single year. Of course not. Some years were down, some were way, way up. But on average, the overall trend was powerfully and consistently upward. That, right there, is the engine of wealth creation.
Now here's the really cool part. You don't need a huge pile of cash to make this work for you. Let's just see what would have happened by investing a small, consistent amount. Let's say just $250 every single month, through all the good times and the bad.
You would have turned that modest monthly investment into over $1.8 million. Come on! This is the magic of compound growth in action. It's the simple power of just staying in the game for the long term.
Okay, so that's the why you should invest. But what about the how, right? How do you actually get those market returns without having to become some full-time stock analyst trying to find the next Apple or Google? Well, the secret is surprisingly simple.
The answer is something called an index fund. It's pretty straightforward. Instead of buying shares in just one company, an index fund lets you buy a tiny slice of all the top companies in the market, all bundled together in one easy purchase. Think of it like buying the entire haystack instead of stressing out trying to find the needle.
Let me put it another way. To really get how this works, think about something you already know, like the music charts. An index fund works in almost the exact same way.
So on the music charts, right? Popular songs with high sales climb to the top. When a song isn't popular anymore, it falls off the chart. It's simple. Well, an index fund, like the S&P 500, which just tracks the 500 biggest companies in the US, does the same thing. When a company does well, it grows. If it does poorly, it gets kicked off the list, and it's automatically replaced by a new rising star. It's basically a self-cleaning portfolio of the market's biggest winners.
This automatic, self-managing system is what makes it such a winning strategy. With just one click, you get instant diversification across hundreds of companies. This dramatically lowers your risk because if one company tanks, it barely even affects your overall investment. And best of all, it's completely passive. No stressful research, no late nights. It just works.
Okay, so you get the concept. It's simple, it's effective, but how do you actually put your money to work? Let's walk through a super simple 4-step action plan to get your investing on complete autopilot.
First things first, open a tax-advantaged account. In the UK, that's something like a stocks and shares ISA. In the US, it's a Roth IRA. This just helps you keep more of your profits away from the taxman. Step 2, connect your bank account and deposit some funds to get started. 3, choose a broad index fund like one that tracks the S&P 500. And finally, and this is the most important step, automate everything. Set up a recurring monthly deposit so you can just set it and forget it.
And hey, here's a little pro tip to make this whole thing even easier. When you're choosing your fund, look for one that says accumulation or just ACC in the name. All this means is that any earnings your investment makes are automatically reinvested for you. It puts your compound growth into overdrive without you ever lifting a finger.
So at this point, I know what a lot of you are probably thinking. Okay, this all sounds great, but with, everything going on in the world, isn't it just too risky to start now? That is the single biggest question that holds people back.
Just look at this chart. It shows the incredible cost of waiting to invest. That first bar? That's someone who starts investing a set amount at age 25.
The second bar is someone who invests the exact same amount, but just waits 10 years to start at 35. I mean, look at that staggering difference in the final portfolio. That huge gap? That's the cost of waiting. It's money you can literally never get back.
So here's the key takeaway. We have to completely reframe how we think about risk. Look, historically, markets have always recovered from crashes. But the one thing you can never, ever recover is lost time. The biggest financial risk you can possibly take isn't being in the market during a downturn. It's not being in the market at all.
So, we've seen the incredible power of long-term growth. We have a simple, proven strategy using index funds, and we have a clear 4-step plan to make it happen. Time is the most powerful ingredient you have. So the real question is, what's stopping you from putting it to work?